What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to do some stock analysis for Celsius stock because this stock has gone through incredible ups and downs this year. Earlier this year, this stock was $96 a share. Now it's only 27, and we're looking at a market cap of $6.3 billion. So, if we want to compare that to their sales, we can see that roughly in the last 20 years, this company has gone from $0 of sales to 1.3 billion last year. Okay. And the last 5 years, they averaged 90% revenue growth per year. So the growth has been absolutely insane for this company. But with that being said, this year they're only expected to do about 6% revenue growth. And then next year it's expected to jump back up to 18%. But that's why you can't always expect those crazy, 60%, 80% revenue growth numbers to stay consistent. That's why this stock has come down so much. Okay. So if we want to compare their valuation to their net income, we can see that for net income last year they did 226 million. And so for a 6.3 billion dollar company, that's not that bad, okay? And the good part too is that see, EPS is actually supposed to be lower this year than it was last year, which is not good. But things happen. I can understand how they're still ramping, they're still growing, they're still marketing and reinvesting. So I can see where they're coming from with that side of things. But with that being said, next year they're expected to do about $1 of EPS. So if we're buying a $27 stock, that means we're paying 27 times forward earnings. And if you want to look at the history of this stock's PE ratio, it's been insane. It's been in the hundreds, right? So if we're paying 27 times, it's really not that bad. If we look at, let's see here, let's look. There's some other articles I brought up here. This one, I remember seeing this on where pretty much this guy was saying that this certain chemical, that it was not safe to drink Celsius because it had too much of this chemical in the drink. But it looks like that has been proven false. And this article is saying that even Monster has 12 micrograms of it, Red Bull has 10, Celsius there's only 6. So if that's true, then that's good for Celsius. And I think that was just like kind of some fake news that had come out. The other thing is in their most recent earnings report that came out about a week ago, I thought this chart was very interesting. So here we have the last couple of years of growth for Rockstar, Alani, Monster, Red Bull, and Celsius. And I got to say, Celsius looks really good with these charts because as you can see, Rockstar is pretty much just their growth is really just decreasing year by year. And then we have, now keep in mind, Red Bull's number one, right? In 2021, you could see that Red Bull was up on top, then Monster, and then Celsius. And that's really the ranking for their market share as well. But as these last couple of years has gone on, we can see that Celsius is growing very fast, and Monster and Red Bull sales have gone down. So from this chart, it really does look like Celsius is eating up their most of their sales, right? So that's the good thing for Celsius. Then we have another chart here that I want to pull up. Where does it say this one? So here we have, as I said earlier, Red Bull's number one. Their market share is 36%. Monster is 27 and Celsius is 12. Then the next competitor, Alani, is only at 3%. And remember, their sales were decreasing anyway, so it doesn't really matter. But the thing, I think Celsius is in a perfect position to where it's low risk. Well, I shouldn't say it's low risk. It's lower risk than a lot of these other ones, but it's in the position to grow more than any other company, I think. I think it's a perfect balance of possible growth with a good amount of, I guess you could say, risk protection, right? I think with it having 12% market share already and they're growing and it seems like they're doing good, I think they've proven themselves enough, especially because they've been growing at insane numbers. They've been growing for 20 years now. So I don't think they're gonna just drop off, next year or something. But their market share is nowhere near Red Bull and Monster. And just like we saw with that last chart, if they're actually eating away that much share from Red Bull and Monster, that means I think this company could, it could have a long ways to go. And we could see this company have 20 or 25% market share in a couple of years. So now, is it possible that they lose market share? Sure, right? It's possible another company comes out. And, I remember when Bang was, you saw that all across social media, and that was a big company, right? But look at them now. They're all the way at the bottom. It looks like they're losing share to these other companies. But Celsius, I just feel like they are in a good position. And so I am interested in buying this stock. I just feel like with the way the stock has been right now, I don't know if we're near the bottom, and especially if we have a correction or a sell-off in the market, this stock can still drop a lot. Like this stock can probably drop another 20% if something like that happened. That's what I'm kind of afraid of. And so it'd be nice to see a little bit more strength in the stock. But with that being said, I don't want to wait forever and wait till the stock is already at 40 or $50 to buy in, because then you kind of just you missed out on most of the gains there. But I don't know, for me there's a lot of things that look promising about this company. And so let's see, we have, and again, if we're talking about $1 EPS next year, that means I'm only paying 27 times earnings. That's not that much. That's like 27 times earnings is what you pay for a company that only grows 7% or something. This company is doing that like this year, but next year they're expected to do 18%. And I think they can do 18%, let's say, for the next 5 years. I think that's realistic. So I think the stock can trade at like 40 times earnings, really. But if we want to be conservative and we want to be pessimistic about the valuation, then okay, maybe the stock trades at 15 times is being really brutal. That's being kind of harsh with the stock. I would say 20 times is like a bad scenario would be if the stock is trading at 20 times, meaning next year the stock's $20 and they do $1 of EPS. That would be a bad, which I think that's possible. That's the only kind of thing that scares me. But I feel like the upside is definitely more than what the possible downside is. I could see the stock losing 15 to 20%, but I think the upside over the next year is about three times that. I think this stock could very well grow 50%, 60%, something like that over the next year or two. So I might start a small position in this pretty soon. I almost bought it today, but I'm going to think about it a little bit more and do a little bit more research on how popular is this. Here's the other thing. I just looked at their Instagram and they're sponsoring. Did I pull this article up? They are sponsoring the Mike Tyson Jake Paul fight coming up, and they have, ads out there with Jake Paul. So I think they're doing a lot of the right positioning and just the way they're placing their ads. I think they're making a lot of good decisions. So it's a tough call right now. It really is a tough call. I'm gonna have to think about this, but there's a good chance I make a small position in this. And the way I look at this is, if bad things happen, the stock will be $20 in a year from now. If good things happen, the stock will be $60 or $50 in a year from now. That's the way I'm looking at this. So we're going to see what happens, and I'm going to keep an eye on it, but I am kind of interested in buying this stock. So that is my analysis for Celsius. Let me know what you guys think. Do you think Celsius is a popular brand out there? Do you think it's going to stick around? Let me know what you guys think down below, and I will see you guys in the next video.